afternoon, we represent Monterrey Institute of Technology and Higher Education Campus Estado de México. We're presenting a whole recommendation on Industrias Peñoles with a 12-month target price of 547 Mexican pesos per share, representing a 10% total return from yesterday's closing price. We will be going over the main reasons behind this recommendation.
To understand Peñoles financially, we first analyzed the main industry drivers. We found that gold and silver prices are the main drivers of Peñoles revenues and stock prices. We also found that Peñoles revenues are highly correlated with the gold prices. The US dollar to Mexican peso exchange rate is another significant factor for Peñoles revenues. We found that about 800% of Peñoles revenues are denominated in US dollars, and about 50% of costs are in Mexican pesos. We are forecasting the USD to MXN ratio to be at 21.1 in 2018, and then to decrease its value onwards slowly. To forecast gold and silver prices, we first evaluated the relationship between gold and silver physical demand within its various product types and gold and silver prices. However, we found that gold and silver physical demand is not a significant driver of gold and silver prices. We then analyzed the relationship between gold and silver prices and investor-related demand. We did this by analyzing the relationship of silver and gold prices and the futures markets in the derivatives markets. We found then that Industrias Peñoles the gold and silver prices are highly correlated with the investor-related demand, which is the most important of both of the demands we've mentioned. To forecast gold and silver demand, we analyzed the most relevant macroeconomic events in the last year. Events such as Brexit, Trump election, the Fed's FOMC meetings were behind most of gold and silver widest prices movements. We're forecasting gold and silver prices to increase in 2018 and then to keep that trend onwards, because we think that the increasing political pressures will push the gold and silver prices up because of the political uncertainty.
Regarding the competitors' outlook, it is important to notice who are the ones that may profit out the most out of this situation. And those are the ones that can translate the lower costs into the higher profits. And in this regard, Industrias Peñoles has been attaining the first place in lowest silver cash cost and the third lowest in gold cash cost amongst its peers. Now, Industrias Peñoles returns from 2010 Q2 have been outperforming both the gold spot price and the median of its peers. And as of 2015, it attained the first place in silver production and the third place in gold production, as well amongst its peers. In terms of the Porter's five forces, in regards to the power of the buyers and existing rivalries, we consider this to be one of the most significant risks to have affected Industrias Peñoles due to the many uses of the final products and the competitiveness levels taken into the cost grounds. Talking about the solid deployment history, we can see that one of its mines, Estado, is one of the richest silver mines in the world, and all of its assets keep at higher levels in terms of, or at the top in terms of cost of production and levels of production.
Continuing with the financial analysis, we have to consider two factors for the company revenues. First, the EBIT levels excluding Fresnillo operations for the base metal segment, which grew 41% on the quarter-on-quarter. On the other hand, EBITDA margins are expected to reach again to 2012 levels in 2017. This is due to two main factors. First, the increased production of gold, and secondly, a weakened Mexican peso. Continuing with the financial analysis, we have to consider that the low cost of debt, the healthy balance sheet of Peñoles comes behind mainly a low net debt to EBITDA ratio. So this brings healthy balance sheets to the company. As well, the expected pipeline of projects that are to continue in the 10 years of the company will increase CapEx in 2017 and should continue in a normal trend in 2018. Our projection indicates that dividend yields should increase as the company revenues increase with our projection. As well, the low CapEx to sales ratio is healthy for the company, which is located well below the median of its competitors. Finally, the DuPont analysis shows that Peñoles is underperforming in return over equity after taxes. Nevertheless, it's overperforming in return over equity on before taxes, and also in asset and operational efficiency. Finally, only 65% of the revenue is exposed to significant changes in commodity prices. This is because of the health plan that the company has established regarding hedging instruments.
For valuation, we focused in two main valuation methods for deriving the price of Industrias Peñoles, including a 5-year discounted cash flow and a relative multiples valuation. The results from the relative valuation suggest a price of 516 Mexican pesos per share, to which we applied a 40% of weight. Together with a discounted cash flow price of 568 Mexican pesos per share, with a weight of 60%, resulting in a total price of 547 Mexican pesos per share, providing us with an upside potential of 8.84% and a total return derived from the sum of the parts valuation of 10%. We use a discounted cash flow analysis, combining the reliable relationships between earnings and cash flows with respect in changes in gold and silver prices in the market. We then determined the terminal growth rate, and we forecasted the model to 5 years to avoid uncertainty in the long term. We decided to use a free cash flow to the firm valuation apportionment due to the company's capital structure, which includes debt and equity. High revenue growth in 2017 will come mainly of a high FX rate and metal production output growth and increasement. From then on, we expect a silver and gold prices and a mine production output growth to boost Peñoles revenues. Then, we determined the terminal growth of the free cash flow to the firm to be of 2%, which is aligned to the GDP growth in the long term. Finally, due to the new growth projects, the capital expenditures in the future are expected to be significant, leading a CapEx compound annual growth rate of about 4% from 2017 to 2022. Regarding our discount rate analysis, the cost of equity was calculated by the capital asset pricing model, while utilizing fundamental methods, resulting in a rate of 9.84%, taking into account two factors. First, the current dividend yield and the Mexico's forecast of 10 years GDP growth.
For the relative valuation, we first selected the peer group that best fits Peñoles' characteristics by using a strict selection criteria. We used 3 different valuation multiples: PE ratio, EV to EBITDA, and the industry-specific EV to value of mining reserves ratio, deriving a final price of 515 Mexican pesos. We also used an observed discount and premium for these multiples because we believe that there are several reasons why Peñoles is trading at a premium regarding PE ratio and EV to reserves, and a discount regarding EV to EBITDA. Our final valuation price is 547.
We also performed a multi-column simulation in order to understand the sensibility of our analysis. Moreover, 52% of our iterations show a fault recommendation. The sensibility analysis showed that the gold spot, silver spot, and CapEx were the main drivers for this, and we also allocated them into the risk matrix.
The biggest risk we believe Peñoles will be facing is the price of gold and silver in the future. We believe that these prices of gold and silver are very related to macroeconomic events, which Peñoles doesn't have control on. These macroeconomic events are regarding principally the Fed's fund rate, probably in the next month, and the European elections for France and Germany in the summer of this year.
Okay, excellent. And my second question is, when you mention some multiple that are used for all your analysis, you don't include the price book value. Why you decided to not include this multiple?
We decided not to include the price book value as we feel that it's not an accurate reflection of the price of the company. Instead of that, we decided to use 3 other multiples, 2 of them that are general to any stock, and 1 that's specific to the industry, which is the enterprise value to reserves, which we feel that better explain or are very related to the company's stock price. Therefore, we did actually the analysis of several multiples, and price was not as significant as these multiples that we chose.
Thank you.
Hi. You have a buy recommendation and an expected return of around 18%. That makes sense. But on the other side, you're expecting the capex to grow from 2017 to 2022 at around 4%. My question is this significant or enough to maintain and to keep the market potential and as you're expecting for the next 12 months in the next 5 years?
Well, first of all, we did not sell a buy recommendation. We sold a hold recommendation. And this is because we're expecting the Mexican market index to outperform what we expect Peñoles to return to the investor. So, answering to your question, we do feel that CapEx is expected to grow because of the pipeline of projects that are to come in the following years. And this will definitely impact the price of the stock. And therefore, we think that the market will outperform this particular stock in the following 12 months.
Two things. I saw some regressions against the 10-year bond and some sort of inflation. Could you elaborate what would be the impact of precious metals in an inflationary environment, and what are your conclusions about the regression? That's one question.
Sure.
And the other one is you talk about the fund model, and you say that the operational leverage, and you make some points about the pre-tax and after-tax fund model. Can you elaborate in why you use that reference?
Sure. Regarding the first question, we believe that an inflationary environment is healthy for the economy, and is negative for gold only when interest rates rise at a higher rate than inflation. But we are expecting inflation in the United States and in Mexico to actually rise higher than the rate of interest rates that the Feds and the Banxico will rise rates. So in that case, when inflation outpaces the interest rates, we think that that's a favorable environment for gold, because a lot of investors are going to hedge against that extra inflation in the market and are going to go for gold and silver to hedge their investments, maybe going out from treasury bonds and stocks, and instead going to gold. So we actually think that the environment we are forecasting for the near term, which is an extra exceeding inflationary environment, is positive for gold and silver.
Well, answering your second question, we make that distinction between return on equity after tax and pre-tax. Why? Because there's a significant difference in the tax rates that are charged to each of the peers competitors of Peñoles. So when we stand in a scenario when we have after-tax ROE, return on equity, we're talking about a not very competitive Peñoles company. But when we talk about return on equity before tax, we can see that operationally, we make that distinction because tax is something that the company is very limited in controlling. So when we see at the actual operation, which is before tax.
Could it be a change if there's some restructuring the capital debt structure? Can it be changed?
Well, yes, but currently the capital structure of the companies leaning forward to the equity part. So maybe if there was a change in issuing more debt to finance the company, there would definitely be a change because it would be discounted before they took taxes off the income. But again, because it's so charged to the other side of equity, it would be a long process for the company to reach a restructuring of their capital structure.
Just to clarify, the range for a whole recommendation of your team is between which terms?
Yeah.
Because with a 10% is still a whole, so
No, well, what we used in order to make this recommendation was plus minus 15% as of yesterday's closing price.
now the company has been investing in previous years, and now we are seeing like a recovery in the price of gold. But I want you to know if do you see like a boost in everything of this in order to help your valuation? But it seems like the recommendation, the assumption behind that is that the company stays like in a business as usual mode. So do you think there could be some surprises from the market, from the investments they have done? They are incorporated in your valuation methods?
Well, of course, the business is very cyclical because it depends heavily on the prices of its commodities. But again, we're issuing a whole recommendation, not because the stock is bad. We're actually talking about a 10% market return, which is very good for a stock. But because we expect the Mexican market to outperform that particular stock, which we're calculating about 10.95% on 12-month return, that's where we're issuing a whole recommendation. So definitely there could be some surprises. For example, if you saw a sudden spike on the commodity prices of gold and silver, which are about 70% of the company's revenues, we would probably see a higher price for the stock, and maybe it would outperform the actual market projection that we have. But since we projected gold and silver, and we have no reasons to believe that that sudden spike is going to happen in the market, that's why we stay with our hold recommendation. Because of that, and because the market is going to generally outperform this particular stock.
Okay, and how did you model the path of the exchange rate?
Yeah, so we first analyzed that the recent macroeconomic events of Trump's Fed funds rate hike and volatility, talking politically, have been the main drivers between USD MXN changes. So we're listing here a series of 4 reasons why we think that the Mexican peso is going to depreciate a little towards 2018 and then to appreciate from then. We're seeing that President Trump policies will keep bilateral tensions high, which will fuel the USD MXN rate. We think that we also think that Mexico will actually soften this pressure for the peso with their current action strategy they've implemented in the past several weeks. But we also think that political uncertainty regarding the Mexican election in 2018 will also support the Mexican peso to depreciate a little in 2018. But we then expect the relations between Mexico and the USA to normalize in 2019, and then that should keep the Mexican peso a little healthier.
One quick question.
In your report, you talk about the hedging strategy of the company in the metal price. But do you know if the company also use a hedge in the cost, especially energy costs?
Yeah. As we are aware, Peñoles has its own energy generating company, which actually provides for about more than 80% of the total energy that their mines consume. So regarding the Mexican energy reforms, we think that they won't impact Mexico, Peñoles so much because of their hedged using their own company that provides Peñoles with energy.